What's up, Bitcoin Bulletin crew? We're kicking things off with some massive news out of the altcoin space. MAGACOIN Finance is suddenly being talked about as a serious contender, a potential Bitcoin alternative, and it's shaking up the whole market narrative. Is this the next big thing? Next up, a game changer from Cboe. The world's leading derivatives exchange is set to launch continuous Bitcoin futures, offering a US-regulated perpetual-style contract. This could completely reshape how institutional and retail traders access crypto derivatives right here at home. We've got all the details. Now, let's talk price action. Bitcoin just topped $112K, but there's a catch. We saw the biggest whale sell-off since 2022, and while the price is up, traders are feeling cautious. What's really going on with ETF outflows, and is Ethereum starting to steal the show? And finally, we're going back to basics to understand why Bitcoin's scarcity is more important than ever in today's wild economy. With governments printing money and debt soaring, the unchangeable supply of Bitcoin could be its greatest asset. Stick around for all the insights, and make sure you're subscribed so you don't miss any of it. Hit that like, subscribe, and notification bell. MAGACOIN Finance emerges as a potential Bitcoin alternative. Get ready, because the altcoin market is buzzing with a name that's rapidly gaining traction: MAGACOIN Finance. This emerging cryptocurrency project is no longer just a whisper in the crypto community. It's being explicitly positioned as a potential Bitcoin alternative in the evolving market narratives of 2025. As investor focus broadens beyond Bitcoin's long-held dominance, MAGACOIN Finance is surfacing in discussions alongside established players like Solana, Cardano, and XRP, signaling its early success in capturing market attention. Why is MAGACOIN Finance suddenly a hot topic? Market strategists point to its unique positioning within the broader altcoin landscape. While Bitcoin remains the undisputed king, the narrative is shifting towards altcoins offering the potential for more significant percentage gains. MAGACOIN Finance is being highlighted as an attractive option for investors looking to diversify their portfolios, seeking a balance between the stability of established cryptocurrencies and the growth potential of newer ventures. Its combination of cultural relevance, scalable blockchain utility, and scarcity-driven tokenomics is designed to make it a leading altcoin entrant for 2025. The crypto community is abuzz with this development, with many analysts and traders discussing MAGACOIN Finance's potential to capture significant market share. The project's growing visibility, ahead of anticipated exchange listings and further ecosystem developments, is seen as a key catalyst for increased adoption and recognition on a global scale. Don't go anywhere, because we've got a massive announcement from a major exchange that could change the game for Bitcoin futures. Plus, stick around to see if Ethereum is secretly stealing Bitcoin's thunder. Cboe set to launch continuous Bitcoin and Ether futures. Big news from the world of traditional finance meeting crypto. Cboe Global Markets, the leading derivatives exchange, has announced plans to launch continuous futures for both Bitcoin and Ether on November 10, 2025, pending regulatory approval. This groundbreaking move introduces a US-regulated perpetual-style futures contract, offering a compliant and accessible alternative to the offshore perpetuals that have seen massive adoption. These new Cboe continuous futures, set to trade on the Cboe Futures Exchange, are designed for long-term exposure, breaking away from the typical quarterly expiration cycles. Instead, they will function as single, long-dated contracts with a 10-year expiration, cash-settled and adjusted daily against real-time spot prices. This structure, utilizing a transparent funding rate methodology, aims to provide a more simplified and reliable way for both institutional and retail traders to gain exposure to Bitcoin and Ether. Catherine Clay, global head of derivatives at Cboe, emphasized the significance of bringing this utility to a US-regulated environment, stating it allows traders to access these products with confidence. The move is expected to appeal to existing CFE customers, institutional players, and a growing segment of retail traders eager for regulated crypto derivatives. This expansion of Cboe's product suite including its VIX futures, highlights its commitment to innovation in the digital asset space and solidifies its role in clearing through Cboe Clear US, a CFTC-regulated entity. Public reaction has been overwhelmingly positive, with many seeing this as a major step towards greater institutional adoption and regulatory clarity in the crypto derivatives market. Educational sessions are planned, underscoring Cboe's dedication to ensuring market participants understand this new offering. But is all this institutional interest enough to keep Bitcoin soaring? We're about to dive into the latest whale movements and see if Ethereum is starting to eat into Bitcoin's market share. Stay tuned. Bitcoin price surges past $112K amidst massive whale sell-off. Bitcoin has once again breached the $112,000 mark, but the celebrations are muted, overshadowed by the largest whale sell-off since 2022. In a single month, approximately 115,000 BTC, valued at around $12.7 billion, was dumped onto the market. This massive distribution event caused a temporary dip to $108,000, leaving many traders feeling more apprehensive than optimistic about Bitcoin's immediate future. While Bitcoin's price has recovered, it's lagging behind other major assets like the S&P 500 and gold, which have hit fresh all-time highs. This underperformance, coupled with weak U.S. labor market data that hints at monetary easing but hasn't significantly boosted crypto, adds to the market's uncertainty. The real concern for traders, however, lies in the spot ETF flows. Significant outflows totaling $383 million were recorded from Bitcoin ETFs over a recent two-day period, a strong indicator of waning institutional sentiment and a potential drag on prices due to large-scale redemptions. Meanwhile, Ethereum is capturing attention with substantial inflows into its ETFs, reportedly around $200 million last week. Some institutions are even adding Ether to their corporate reserves, suggesting a capital rotation within the crypto space. This shift positions Ethereum as a potential alternative reserve asset, drawing institutional interest away from Bitcoin. Futures funding rates have bounced back, but traders remain on the sidelines, watching ETF movements closely. Is this whale activity just a blip, or is Ethereum the new king? We're breaking down the real reason Bitcoin's scarcity is its biggest strength right now. You won't want to miss this. Bitcoin's engineered scarcity, the ultimate hedge against inflation. In an era of escalating government debt and loosened monetary policy, Bitcoin's unalterable scarcity is emerging as its most potent asset. Unlike traditional assets whose supply can be manipulated, Bitcoin's protocol hardcaps its total supply at 21 million coins, a feature that becomes increasingly valuable as global liquidity expands. The 2024 halving event dramatically reduced the rate of new Bitcoin issuance, cutting the block reward to 3.125 BTC. This means new supply is now capped at roughly 450 coins per day, a number that will only decrease over time. This built-in deflationary mechanism is further reinforced by the growing pool of ancient coins, those held unmoved for over a decade, which are increasing at a faster rate than new coins are mined. Long-term holder supply remains near record highs, indicating a significant cohort of price-insensitive investors prefer to hodl rather than trade, further tightening the available float. The influx of new buyers, particularly through U.S. spot ETFs, aggregates demand from retirement accounts and institutions seeking operational simplicity. These ETFs are consistently driving cash inflows, leading to more coins being locked into investment vehicles designed for long-term holding, reducing the supply available on exchanges. Compared to gold, which sees new supply from mining each year, Bitcoin's issuance path is mechanically shrinking, making incremental demand more impactful. While macroeconomic factors like global debt and potential interest rate cuts by the Federal Reserve can introduce short-term volatility, they paradoxically strengthen Bitcoin's long-term investment thesis as a hedge against inflation and currency debasement. For investors, the strategy remains clear. Embrace dollar cost averaging during quieter periods and resist the urge to sell, allowing Bitcoin's engineered scarcity to work its magic. That's all the deep dives for today, but we've got a lightning round recap of all the top stories and a full call to action to keep you connected. Don't go anywhere. And that's a wrap on today's Bitcoin Bulletin. We saw MAGACOIN Finance emerge as a potential Bitcoin alternative. Cboe is launching continuous Bitcoin futures for U.S. traders. Bitcoin's price is up, but traders are cautious amid whale sell-offs and ETF outflows. And we've explored why Bitcoin's scarcity is its ultimate strength. Don't miss out on any of the action. Smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, ring that notification bell so you never miss an update, drop a comment with your thoughts on today's stories, and follow us on all our social channels for real-time updates. We'll see you next time.